You might not expect a budget fight in Washington to affect whether you can afford your health insurance next year, but for millions of Americans, that's exactly what's happening right now. And before we go any further, let me ask you something real quick. Comment your name and state below. I'd love to see who's watching and benefiting from these videos. Every single comment helps this community grow, and I read more of them than you probably realize. Now, let's talk about what's really going on, because there's been a lot of confusion, a lot of noise, and frankly, a lot of stress for people who are just trying to plan their healthcare for 2026. Over the past few months, you may have heard headlines tying healthcare to government funding deadlines, continuing resolutions, and even the threat of a shutdown. While healthcare wasn't the only issue on the table, it absolutely became one of the most emotionally charged parts of the conversation. And at the center of it all was a very specific question that affects millions of households: what happens next to the Enhanced Affordable Care Act premium tax credits? These enhanced subsidies were first expanded during the COVID emergency, when lawmakers recognized that rising healthcare costs were colliding with job losses, early retirements, and economic uncertainty. Later, they were extended again, giving people some breathing room and, for many, access to coverage they otherwise wouldn't be able to afford. The result was record enrollment in ACA marketplace plans and premiums that stayed far lower than anyone had expected just a few years ago. But here's the part that's making people nervous. Under current law, those enhanced subsidies are scheduled to expire after 2025. That means decisions made in Washington over the next several months will directly shape what people pay for coverage in 2026. If you're someone who buys your insurance through the ACA marketplace, or you help a parent, a spouse, or even a neighbor do it, you already know this isn't some abstract policy debate. This is about real numbers on a real bill that shows up every month. Imagine a 60-year-old couple who retired a little earlier than planned. They're not poor enough for Medicaid, but they're not yet eligible for Medicare. They budget carefully. They track their spending. And right now, thanks to enhanced subsidies, they might be paying a few $100s a month for coverage instead of over $1,000. If those subsidies expire, that monthly premium could jump dramatically, not because their health changed, but because the rules did. That's why this issue keeps coming up in budget negotiations, even when it's not formally part of a funding bill. Lawmakers know the clock is ticking, insurers know the clock is ticking, and consumers definitely feel that clock ticking. Here's something important that doesn't always get explained clearly. Insurance companies have to file their proposed premiums well in advance. They can't wait until the last minute to see what Congress does. So many insurers are currently pricing their 2026 plans assuming that the enhanced subsidies will expire. That doesn't mean they want them to expire. It just means they have to plan for the law as it stands today. And that creates a strange and uncomfortable situation for people shopping for coverage. You might see a premium quote and have no idea whether that number will still be accurate if Congress steps in later. You might hesitate to enroll, or you might enroll feeling unsure whether you're locking yourself into something you can't afford long-term. This uncertainty doesn't just affect ACA plans either. It ripples across the entire healthcare system, including Medicare Advantage. Now, you might be wondering, what does Medicare Advantage have to do with all of this? After all, Medicare is a separate program, right? Yes, but the healthcare market is deeply interconnected. When ACA enrollment drops or becomes less stable, providers feel it. When providers feel it, networks change. And when networks change, Medicare Advantage plans respond. As we head into 2026, Medicare Advantage plans are already undergoing meaningful shifts, especially around supplemental benefits like dental coverage. Dental has become one of the most heavily marketed features of Medicare Advantage, but not all dental coverage is created equal, and not all of it is guaranteed to stay the same next year. In recent years, many Medicare Advantage plans expanded dental benefits aggressively. Some offered thousands of dollars in annual coverage, broader networks, and more comprehensive services. But behind the scenes, those benefits are expensive to maintain, especially as utilization increases. For 2026, we're seeing signs that some plans are becoming more selective. That doesn't mean dental benefits are disappearing, but it does mean they may change in ways that aren't obvious at first glance. Some plans are tightening networks. Others are shifting from comprehensive coverage to preventive-focused benefits. And in some cases, dollar limits are being adjusted downward to control costs. Why does this matter right now? Because people making healthcare decisions don't do it in a vacuum. A 64-year-old on an ACA plan today might be thinking about which Medicare Advantage plan they'll choose next year. If their ACA premiums suddenly spike, they may delay care, skip dental visits, or choose plans based solely on cost rather than coverage quality. And that's where the emotional side of this really comes in. Healthcare decisions are already stressful. Add uncertainty, shifting rules, and confusing messaging, and people start to feel like the system isn't designed for them. They feel like they're always reacting instead of planning. Let's talk numbers for a moment, because context matters. Analysts estimate that permanently extending the enhanced ACA subsidies would cost several $100 billion over a decade. A shorter extension would cost far less. That's why you hear lawmakers discussing partial extensions, income caps, or scaled-down versions of the current subsidies. None of those options are simple. Narrowing eligibility might leave some middle-income households exposed. Scaling back subsidies could still result in noticeable premium increases. And short-term extensions keep everyone guessing year after year. Meanwhile, enrollment projections show that if enhanced subsidies expire completely, millions of people could drop coverage. And those who remain enrolled would likely be older and sicker on average, which tends to drive premiums even higher over time. That's not good for consumers, insurers, or the stability of the marketplace. Now, let's bring this back to Medicare Advantage dental coverage in 2026, because this is where many people are looking for certainty and value. Dental care isn't optional for most seniors. Poor oral health affects nutrition, heart health, diabetes management, and overall quality of life. Yet traditional Medicare still doesn't include routine dental care. That's why Medicare Advantage plans emphasize dental so heavily. But as costs rise and budgets tighten, plans are being forced to make trade-offs. Some are focusing on preventive care like cleanings and exams, because preventing bigger problems is cheaper in the long run. Others are experimenting with authorization requirements or limited provider lists. For beneficiaries, this means reading the fine print matters more than ever. A plan that advertises dental included might still have limits that affect whether you can actually use it when you need it. And those limits can change from year to year. This is also why timing matters. Just like ACA insurers, Medicare Advantage plans finalize benefits months before enrollment starts. If broader healthcare policy remains uncertain, plans may take a more conservative approach in their offerings. So where does that leave us right now? It leaves us in a moment where nothing catastrophic has happened yet, but the risks are real. The government continues operating. People are still enrolling. Benefits are still available. But decisions made in the coming months will shape affordability, coverage stability, and benefit design for years to come. If you're on an ACA plan, the best thing you can do is stay informed and be cautious with assumptions. Don't assume a quoted premium will automatically come down later. Don't assume Congress will act at the last minute. Plan based on what's known, and be ready to adjust if policies change. If you're approaching Medicare eligibility, pay close attention to how Medicare Advantage plans are evolving, especially when it comes to dental coverage. Look beyond the headline benefits. Ask questions. Compare networks. And think about how changes in the broader healthcare market could affect your options. Healthcare policy can feel distant, but its effects are incredibly personal. It shows up in your budget, your appointments, your peace of mind. And while it's easy to get overwhelmed, staying informed gives you leverage. It helps you make choices instead of just reacting to surprises. That's why we cover these topics the way we do here. Not to scare you, not to overwhelm you, but to give you clarity in a system that often feels unnecessarily complicated. The bottom line is this. Even though immediate funding crises may come and go, the underlying question of healthcare affordability remains unresolved. Enhanced ACA subsidies, Medicare Advantage benefit design, and dental coverage changes for 2026 are all part of the same larger story. A story about how we balance cost, access, and stability in a system millions of people rely on every single day. We'll continue watching how these decisions unfold, breaking them down in plain English, and helping you understand what they actually mean for you and your family. And if this kind of explanation helps you feel more confident about your healthcare choices, make sure you like, subscribe, and share this video with someone who could use a little clarity right now. And again, comment your name and state below. I really do want to know who's here, who's listening, and who we're helping as we navigate these changes together.